Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just a bright green on the crypto charts over here. And we can see that almost all of the red has been erased from that little bit of a pullback and scare that we had yesterday. Of course, I was saying on Twitter, as well as in the Discord group discussion forum, as well as on my video, that I did see everything was quite bullish. I didn't know why the market would be freaking out. According to the Alpha Momentum Pool's strategy, everything was looking great. And to be honest, that's what we got. We got a great outcome where we were, in fact, back at that $23,000 level that I suggested. And of course, the market was freaking out. It was just a classic fake out in the markets. But let's go ahead and jump over to the Market Watch calendar because, of course, we did get a lot of data today. Yesterday there was nothing, okay, but today we got a ton of information where jobless claims are lower than expected, so that could work against us with the Federal Reserve. Continuing jobless claims were a little bit higher, that could be in our favor. Real gross domestic product was higher than expected, but lower than previous, so I'd say that's pretty neutral. Real final sales to domestic purchasers, that is significantly lower than expected. I'm not really sure the total impact of that in the market decisions today. Trade in goods, the deficit, just I don't think that's going to have any significant effect on us either. Durable good orders, we do see a huge increase actually over the expected and also over the previous reading. So that does suggest a little bit of hotness to the market there, which could work against us going into the Fed meeting, where Jerome Powell may want to increase interest rates maybe by 50 basis points instead of 25 basis points, but we're just not sure yet. Core capital good orders, this is basically a wash. Fed National Activity Index, basically a wash. New home sales, a little bit higher than expected and higher than the previous reading, by a good amount, but I wouldn't say that this would have any significant impact on the Federal Reserve's decision coming up on February 1st. Tomorrow, we do have information on the PCE data. Now, the PCE data is what the Fed primarily uses to make its decisions, so that will be a very significant data day tomorrow. As for today, a little bit of a wash, I think, both a mix of good news and bad news. It does suggest perhaps a softer recession than some people were expecting, but also it does give a little bit more flexibility to the Fed to perhaps do 50 basis points instead of 25 basis points, which could absolutely shock and awe the market because lo and behold, 100% of the market is pricing in 25 basis points, and no one, only 2% of the market is pricing in 50 basis points, which means if it ends up being 50 basis points, we are going to get knocked on our butts. This market is going to come tumbling down. And also, since the current price that we're at already includes 25 basis points, then should we get any type of, bad news on these earnings reports that are coming in from companies from the stock market, then we could also be knocked down. So I really hate it when 100% of the market is targeting one number, basing everything off of, one figure, especially when it's a projection. It's not even a number that is actually measurable yet, which in this case is the Fed interest rate increase of 25 basis points instead of 50 basis points. We don't know until February 1st, so why is 100% of the market pricing that in? I would have been a lot more comfortable if 25, 50% of the market was thinking that 50 basis points is possible, because at least we would have a cushion. We could continue to pump if it was 25 basis points and part of the market thought it was 50 basis points. It means we would have a little bit of room to run, but we have no room to run should it come in 25 basis points, and should it come in 50 basis points, we only have down to go. So again, guys, February 1st, it could be very treacherous, so just to be careful, especially as we have that PCE data coming out tomorrow. That could be what ends up, readjusting some expectations. So we'll have to look at that PCE data very carefully. Again, guys, just we're in between a recession and inflation, and that's basically that kind of stagflationary mode. So we have two different forces competing with each other economically, and sometimes bad news is good news, but then sometimes good news is good news, and it's just a very confused mess. And I feel like the market is acting a little bit exuberantly, a little bit irrationally, and while the Fed has signaled 25 basis points more or less, they did leave quite a bit of wiggle room for 50 basis points, and it might even be a trap by the Fed to try to knock the market down on its butt to try to cool the economy to fight inflation. So just be careful. The Fed isn't necessarily our friend, okay? Guys, let's just jump over to the charts, and you can see we did have that just huge spike to almost 24,000 yesterday. However, we did end up in this neighborhood if we look back where we did have that 40% rally where the Alpha Fam did catch the Pico bottom there, caught the Pico bottom here, we caught the Pico bottom over here, we caught the Pico bottom out of here. So we got two epic bull runs, which the Alpha Fam has captured, and just congratulations to you guys if you did capture that 40% move, if you did capture this 50% move on Bitcoin, because we have been just absolutely killing it and paying the bills over here. Because as I remind you every episode, take your profits in a macro downtrend. Always be taking your profits. So I hope every time we get into this kind of consolidation area, where the chart just does this kind of jittery thing, I hope you take a significant amount of profits. Usually there's a little bit of a pullback. You can always re-enter some of these positions if you see some coin that has a juicy entry, right? And then ride it up to the next one. But if it continues to go down, you're going to be glad that you took your profits, right? And one of these days, we're going to get smacked down. You can see we're overextended our EMAs, even though we are riding quite bullishly. We were also riding quite bullishly here, here, and here, and yet we had pretty significant pullbacks, and this one actually dumped us all the way to our lows. It's not inconceivable that we could get dumped all the way back down to this 200 on the 6 hour here. I am on the 6 hour chart because that does close in about 2 hours. Let me throw on some alpha momentum pools for you guys so you guys can just have a tradable setup for the 6 hour, okay? Should we be in a reliable spot here. I would say that we've kind of lost support here, which should be 22,998. Basically, 23,000 is what we needed to hold for our upward momentum on the 6 hour. So the 6 hour is giving us a bias to the downside. We still will have a chance above 22,856. We don't want to lose to 22,856. When I made these lines, we were up here. We are just crashing down below it. So again, the critical level for us is 22,856. Lose that, we might even be coming down here to 22,700-ish, okay, which is going to be a critical level to hold on the CME chart, the professional exchanges, okay. We are looking at the 24/7 kind of just forever running, non-stop crypto exchanges like Binance and Coinbase. But the professional exchanges, they tend to close at nights and weekends and on major holidays. And so they do have a slightly different momentum pivot, volatility pivot than the 24/7 exchanges. But right now, the professional exchanges does give us a little bit more of a buffer room compared to the professional exchanges, compared to the 24/7 exchanges. So I'm still biased to the upside here. We do have this kind of bearish divergences starting to form on our RSI, which you can just see in the chart. Whereas we had just an amazing push to the upside over here, we're starting to round again, getting a little bit of this kind of rounding look, this little bit of a rounding look that does come when we get a little bit toppy or towards the need for a bigger pullback. I wouldn't say that we're there yet. Just yet, we haven't confirmed anything, but the 6 hour could be the start of something that could be a deeper pullback should we lose 22,856. Above 22,000, pardon me, 23,140, we will regain that momentum to the upside. And above 23,180, I would just say, yeah, we're going to probably continue on our merry way. And we can take a look at that in a little bit more detail on the daily. So let's jump over to the daily chart here. Where we do see we are also bullishly postured on our EMAs, okay? We can see that if I just zoom in, that we are in danger of losing the bottom of the momentum pool on the daily. So this is a tradable short, to be honest, because we do have the volatility pivot above us on the daily, whereas on the 6 hour it was below us. So we had a little bit of an extra layer of support on the 6 hour. On the daily, closing in 7 hours and 45 minutes, we don't have anything below us really. So we lose this, then maybe we could fall down as low as 22,300 before a little bit of a bounce. But basically this is very dangerous. We want to hold on to 22,943 by 7.5 hours essentially. And above that, we're just in the momentum pool, just kind of chopping sideways. Would like to see us above 23,063 and especially above 23,114 in order to potentially get that push up to the daily volatility pivot, where once again we might be rejected, just like we rejected here. Rejected, 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 rejected. Are we going to get rejected again? I don't know. Okay. But after this huge push up, of course, we do need to consolidate. So even if we are bullish, the market's kind of tired. Buyers are kind of tired. And so a lot of profit taking will be happening. And that's just how you get this consolidation. But we do see that buyers just continue to buy. And, on average, these candles are getting higher, and they're also reaching higher. So again, it's still considerably bullish, even though we are losing momentum overall and we are starting to create bearish drives of divergence. Um, Guys, let's go ahead and jump over to the 2-day chart, because the 2-day chart also closes today in 7.5 hours essentially. And on the 2-day chart, we're still looking quite good. And we do have the 200 up here on the 2-day. So that's kind of that $26,000 area. Should we get a pop above 23,385, maybe we could push into that 2-day 200 EMA area. But for now, we're just moving in between the volatility pivot and are holding our current momentum. I really don't feel bad as long as we're above 22,636. But again, I need us to see us capture 23,385 for me to have a bullish bias. Okay, so otherwise I just see it as us going sideways with a little bit of bullishness, but just largely sideways and up as opposed to just up, right? And then if we do lose that level, that 22,636, then we will get into the alpha momentum pool, where I do think under 21,881, we're going to potentially start squeezing to the downside. And if we lose 21,319, we're going to lose all of our momentum, could come down here to 20,600, maybe even kind of that $20,000 area, which could be super risky. But you do see we have support over here. And so between the 6 hour, the daily, and the 2-day, we really probably would catch some support on this area of candles just over here, and that could be our higher low before we just continue our way up, okay? Or perhaps we end up trading some type of a channel, like I was pointing out in the last episode, where maybe we have a high here, and then we have some type of, low end over here, which you can see this wick, pretty much perfectly tagged. And so maybe this is just our channel now. And if this is our channel now, then, we could just be kind of grooving around on it, right? Just a deviation, come back up here. Maybe we work our way back down. Somehow we get into this, maybe fake people out before we go, right? Something like this. Or even have a lower thing and some type of bullish divergence that goes along with it. I don't know. Markets can be tricky. They can try to take this liquidity. They can try to take this liquidity. They can try to fake you out. Okay, it doesn't mean that the game's over. But my whole point is that we seem to be in a new channel, and if you think that we're coming back to these this kind of $15,500 price for your second chance, uh, I don't know. I don't know about that. I think probably the best you can hope for now is maybe 18,500. Should we do something like this? Maybe make a kind of head and shoulders before we go, out. That would be the best case situation for you to load up and then be able to carry this out. Should the market fail, right, because of Jerome Powell, let's say he does 50 basis points instead of 25 basis points, well, we still might get one more spike up, kind of just tag the top of this channel, take out some liquidity there, and then grind our way back down, and maybe the Powell dump would bring us here, depending how weak the market is, we could break under there. And if we break back into this channel, I think probably we're going to lose it that time. And maybe we get that 10,000, 14,000, whatever that people were looking for originally. But, we can't really project that far right now because so far it's bullish. And, just based upon the merit of what we're seeing on the chart right now, I would think that we actually have a chance to break out of this channel and do something a little bit crazy before we check back and maybe lose this channel, okay? I mean, this could happen, but I'm going to be bullish unless the chart tells me to be otherwise. And, I just think that 25,500 is still a pretty natural target. And if we go to the daily here and put on our EMAs, you can see we have support underneath us at this mid channel here. Okay, you see that 200? It's like right at the middle of the channel. And so, again, even if we have a pullback, whether it's from here or from here, we could get a bounce off of that mid channel, and maybe that fails and then we check the bottom. But I wouldn't necessarily count us ever coming back down here. As long as we remain bullish, we can keep pushing. This doesn't have to be over, guys. Um, but yeah, we have support here. So don't be looking too far low if you're not in on this yet. But obviously late bulls can get wrecked because you're now buying in this kind of upper half of the chart, right? I mean, this is our channel and you're buying in the upper half of it. So it's a very awkward spot. If you didn't buy with us down here, or you didn't buy with us, at one of these areas, then it's a little bit late. It's a little bit late, at least for this channel. In terms of the whole macro, I can turn log off, and you can see that it's not late yet, right? And should we get a summer rally, even if we do end up grinding down and then whatever, right? Maybe even some type of a crash later on or something, who knows? Uh, probably we're going to take out these areas eventually, okay? Even if we're bearish and come back down. I'm not trying to make a game plan here. I'm just trying to show you that, this chart has a lot of potential in it, okay? Liquidity hasn't come back to the market, so I'm not sure what drives us out of this channel. Nothing has really changed from when we were here to now, except that the Fed is finally starting to talk about, you know, increasing rates at a slower pace. But again, they're still taking liquidity out of the market. So, what changed except interest rates are higher now? Yes, the rate of them increasing is lower, but rates are still increasing, just slower. And so we have higher rates. That's worse conditions than before. Plus, we have more recessionary data, and the earnings reports of stocks are getting worse and worse. So, yes, there's the potential for more downside in this market. Okay, I don't want to, I don't want to be some type of a perma bull just because we bought at the bottom here doesn't mean that we can't come back. Okay, it doesn't mean that we can't trade in some type of a range. Okay, um, but just pay attention to this stuff. And then also, we could get a nice squeeze. Let's go to the weekly. We could get a nice squeeze out of this area because look at the 200 here on the weekly, and then all of these EMAs. If these continue to rise, and if we just hold on to these levels, then we could potentially get a nice pop, maybe up to that $30,000 area, which then might fail, right? And then who knows, maybe we use this area as support. And maybe we even get more of a rally and then eventually crash down, right? And maybe even make a lower low or just retest this area, which we've created as support, and then go on our way, okay, with a little bit of a higher low. Both are possibilities, guys. Just something to think about, okay, as as we're in this area. It's not too late on the macro, but it is something to consider that we are in the upper half of the channel that we're in. And so at any time, we could have a rejection in these rejection areas that just bring us back down. And just be very careful, okay? We're in the dead middle of this channel. And what's the worst place to be trading? It's in the middle of a channel, okay? You want to be selling at resistance. You want to be buying at support. And in the middle, just it can be very random, very unpredictable. So I don't have anything to say to you guys because look at these EMAs also, right? This 4 is curving up, but it's curving over. This 21 is curving up, right? It's curving up, but it's lower. And so this thing could just check back into this area and then go. But at the same time, it's not bearish, so it could also pump up and then check back, right? So you really have no way to just plan for what the next step is unless you look very carefully at those momentum levels that I showed you, or if you're just constantly on the small time frames looking at what's going on. So here's the 4 hour, and still it's very difficult to see what your move would be. We could easily have a drop down just like this, but we could easily just pump up because we're at the top of these EMAs, right? So, guys, just to be careful out there, let's take a look at the volatility for the 6 hour. It does look like, it's still in a little bit of an expansive mode. Price has been kind of pushing up during that time. So maybe we could get another push to the upside. We'll see. Let's take a look at the daily. The daily has been consolidating, which, yeah, we've just been going sideways. And so it looks like it could just continue to consolidate, maybe a little bit more sideways action. And then the 2-day, which pushed all the way up here, is starting to pinch shut. It does have a little bit more to potentially go. It could squeeze out one more pop. Maybe that's what takes us to 25,000, but it's getting very tired as well, okay? Volatility doesn't tend to stay at the top for too long. It can, but it just tends not to. And so if we get a clean cross on that, I would suggest that probably you're going to consolidate on the 2-day as well, which would be the first time that the 2-day consolidated, by the way. So that's that for volatility. Let's see, we had EMAs, momentum, volatility, price action wise. I'm not seeing any patterns per se. This is just a classic kind of indecision, kind of consolidation area. Just a little bit of a, it is bull flaggy, but these things can be easily broken as well. And the daily just looks bullish, right? Just looks bullish. Above the 4, above the 9, bullish, right? And the 2-day, way above the 4, so it's just super bullish, okay? Like I have nothing bad to say about this except that it's overextended from the 9, and that could want to come back to test this mid channel as well as the 9, okay? But it's so bullish it could just pump up to the 25 and before it chucks back. Again, trading from the middle of a channel, just not the best idea. All right, guys, I think I'm just going to end it there. We've done very, very well trading from the literal pico bottom of this formation all the way up. And so just taking a little bit of profit along the way, no harm in that. Finding good setups in the discussion forum in the Discord. The link is in the description of this video. And just having some good time making some money. Guys, I'm really glad that we got this bullish session, even if we do end up coming back, sort of like what we did up here, like when we went from 18K to 25K. I came all the way back. It could happen again, right? Or at least to the mid channel, like maybe pump up to here and then come back. Maybe we have a little bit more support on our EMAs. Don't want to break too much structure there. But if we do, then we'll know that we're squeezing bearish, and I'll tell you at that time. I just dead middle of the chart, not sure what to say. Guys, that's your alpha for the day. Stay safe and happy trading.